Most traders think they'll know they're becoming profitable the moment the money starts flooding in. The big payout, the huge month, the screenshot that makes you feel like you finally figured it out. But here's the brutal truth. Profitability in trading almost never feels like success when it first shows up. In fact, it usually feels boring, uneventful, almost disappointing, because the signs that you're actually becoming a profitable trader are not emotional. They're structural. They show up in how you think, how you manage risk, how you react to losses, and how little the market is able to mess with your head. And this is exactly why most traders completely miss them. They're waiting for excitement. The market rewards discipline. They're waiting for validation. The market rewards indifference. They're waiting for certainty. The market rewards probability. If you've been trading for any meaningful amount of time, you know the pain already. You've watched a trade run perfectly without you. You've entered too early. You've exited too late. You've revenge traded after a loss. You've doubled down trying to recover. You've stared at the screen watching your P&L swing like a heartbeat monitor. And somewhere along the way, you probably started asking yourself a dangerous question. Maybe I'm just not cut out for this. Here's what nobody tells you about becoming a profitable trader. It doesn't happen when you suddenly learn some secret strategy. It happens when your behavior becomes statistically aligned with how profitable systems actually work. And that transformation is subtle, quiet, almost invisible. But there are signs, clear ones. And if you're experiencing these signs right now, you might be a lot closer to profitability than you think. So, in this video, we're going to break down 5 signals that you're actually evolving into a profitable trader. Not motivational nonsense. Not surface-level advice like, just manage risk. We're going to look at the behavioral shifts, statistical realities, and psychological rewiring that happen when someone stops trading like a gambler and starts operating like a professional. And if this video helps you see the market differently, consider subscribing. Because the goal here isn't hype. The goal is clarity. Now, the first sign you're becoming a profitable trader is one that actually confuses people the most. You stop caring about individual trades. That sounds strange. Because when most people get into trading, every trade feels like it matters. Every entry, every exit, every tick. Your brain treats each trade like a final exam. You win, you feel brilliant. You lose, you feel like an idiot. Your identity swings with your P&L. But here's the brutal truth. No professional trader cares about a single trade. Not because they're careless, but because they understand something that beginners fundamentally struggle to accept. Trading is a probability game. Let's say your system has a 55% win rate. And let's say the average winning trade makes $1,000. And the average losing trade loses $700. Now, over a large sample size, this system makes money. The math works. But here's what your brain hates about this. You could still lose 5 trades in a row, or 7, or even 10. And that doesn't mean the system is broken. It means variance exists. This breaks the beginner's brain, because beginners treat trading like prediction. Professionals treat trading like distribution. A casino doesn't care if a player wins 3 hands of blackjack. They care about the next 1,000 hands. And when traders begin shifting into profitability, something changes. They stop reacting emotionally to individual trades. A loss doesn't trigger panic. A win doesn't trigger euphoria. Both outcomes become data. Just one more sample in a much larger data set. Here's what that looks like in practice. You take a trade. It loses. Instead of immediately asking, what did I do wrong? You ask a different question. Did I follow my system? If the answer is yes, the trade was correct, even if it lost money. Let that sink in. A correct trade can lose money. This is one of the most important realizations in trading. And once your brain accepts it, your behavior starts changing. You stop moving stops. You stop closing trades early out of fear. You stop doubling position size after losses. Because you understand something simple. The edge lives in the sequence, not the trade. Think about flipping a coin that lands heads 55% of the time. If you flip it 10 times, the results could be anything. But if you flip it 1,000 times, the probability begins asserting itself. That's what profitable traders internalize. They're not trying to win this trade. They're trying to execute the next 100 trades correctly. And when that mindset locks in, your emotional volatility collapses. You no longer ride the roller coaster. You become mechanical. And that's a massive sign that your psychology is maturing. Now, here's the second sign you're becoming a profitable trader. Losses stop feeling catastrophic. let's talk about the hidden emotional structure of losing trades. For beginners, losses feel personal, not financial, personal, because beginners don't just risk money, they risk ego. Every trade becomes a statement. I think price will go here. And when the market goes the other way, it doesn't just invalidate the trade. It feels like it invalidates you. Your intelligence, your skill, your decision. That's why losing trades hurts so much for new traders. Not because of the money, but because of identity. Now, here's what starts happening when someone moves closer to profitability. Losses become operational expenses, just like inventory in a business. Imagine owning a restaurant. You buy ingredients. Some food spoils. Some dishes don't sell. That's not failure. That's operating cost. Trading works the same way. Losses are the cost of accessing opportunity. And when this realization becomes real for a trader, their behavior changes in a way that's extremely measurable. They stop trying to avoid losses. Instead, they control them. Let me show you exactly why this matters. Imagine two traders. Both have accounts with $10,000. Trader A risks 5% per trade. Trader B risks 1% per trade. Now imagine they both hit 5 losing trades in a row. Trader A just lost roughly 25% of their account. Trader B lost about 5%. Same skill, same system, completely different survivability. This is where most traders destroy themselves. They build strategies around profits. Professionals build strategies around survival. Because if you survive long enough, your edge has time to work. But if you blow up during variance, the edge never gets a chance. And here's where the psychological shift happens. When traders truly accept that losses are normal, they stop trying to be right. They start trying to execute well. Those two mindsets produce completely different behaviors. Trying to be right leads to moving stop losses, adding to losing positions, refusing to close trades. It's trying to prove the market wrong. Execution mindset leads to defined risk, pre-planned exits, consistent position sizing, zero negotiation with the stop loss. And here's the interesting part. When losses stop hurting your ego, discipline becomes easier because you're no longer defending your identity. You're just running a system. That's a huge sign you're evolving as a trader. Now, the third sign you're becoming profitable is one that surprises a lot of people. Your trading becomes boring. Seriously, boring. Because early in a trader's journey, everything is exciting. Charts, indicators, new strategies, different markets. Crypto 1 week, Forex the next. Options the week after. Your brain is constantly hunting for stimulation, and the industry feeds this. Everywhere you look, there's someone promising faster profits, better entries, higher leverage, more trades. But here's the brutal truth nobody wants to say. Most profitable traders operate extremely boring systems. Same setups, same markets, same risk model, day after day. Month after month. Why? Because consistency produces measurable data, and measurable data allows optimization. Jumping between strategies destroys that process. Imagine trying to test a coin's probability, but every 10 flips you change the coin. You'd never know the real distribution. That's what most traders do. They never gather enough consistent data to actually measure their edge. But when someone begins moving toward profitability, their behavior simplifies dramatically. They narrow their focus. Instead of trading 10 different setups, they master 1 or 2. Instead of scanning 20 markets, they watch 3 or 4. Instead of forcing trades every day, they wait. This patience is one of the clearest signs of trader maturity, because beginners feel like they need constant action. Professionals understand something different. The market only offers real opportunity occasionally, and forcing trades during low probability conditions is one of the fastest ways to bleed an account. So, when you notice something strange happening, you're watching charts for hours and taking fewer trades than you used to. That's not regression. That's evolution. You're filtering noise, and that's exactly what profitable traders do. But there's a deeper layer to this shift. Your dopamine system starts rewiring. At the beginning of your trading journey, your brain gets dopamine from winning trades. Big profits, fast moves, adrenaline. But profitable traders get dopamine from something completely different. Execution, following the plan, respecting risk, logging trades correctly. That might sound small, but it's huge, because it means your motivation is no longer tied to outcomes. It's tied to process, and process is controllable. Outcome is not. Now, the fourth sign you're becoming profitable is one that quietly separates amateurs from professionals. You stop trying to predict the market and start reacting to it. This is one of the hardest mental shifts in trading because prediction feels powerful. Your brain loves the idea of calling the market. I think price will reverse here. I think this breakout will run. I think the market is overbought. Prediction feeds ego. Reaction feeds profit. And profitable traders understand that the market doesn't care what they think. It only reveals information through price movement. So instead of predicting, they build conditional systems. If price does this, I will do that. This might look like waiting for a pullback, waiting for confirmation, waiting for a breakout retest. Whatever the strategy is, it's reactive. And this shift has massive psychological benefits because prediction creates emotional attachment. Reaction creates flexibility. When a trader predicts the market, they anchor to an idea. And when the market moves against that idea, they resist. They hold losing trades longer. They rationalize. They ignore signals. But reactive traders have no attachment. If the condition isn't met, no trade. If the trade invalidates, exit. No drama, just process. This mindset is extremely difficult for beginners because beginners want certainty. They want to know what the market will do. But professionals accept uncertainty as the default state. And once that acceptance happens, decision-making becomes much cleaner, much faster, much less emotional. Now, there's one more sign that tells you you're getting very close to profitability. And this one is subtle, but powerful. You stop obsessing over how much money you can make and start focusing on how much you can lose. This completely flips the way most traders approach the market. Beginners think in terms of potential profit. How big could this move be? How much leverage should I use? How quickly can I grow the account? But profitable traders think in terms of controlled damage. How much am I willing to lose if I'm wrong? Because every trade begins with the same assumption. You might be wrong. And when traders internalize that idea, their entire risk model changes. Position sizes shrink. Stop losses become non-negotiable. Risk per trade becomes fixed. And suddenly, something interesting happens. The account stops swinging wildly. Drawdowns become manageable. Emotional stress drops dramatically. And that stability allows the edge to compound. This is the moment when trading starts feeling less like gambling and more like running a business. Because every business manages risk first, revenue second, and traders who adopt that structure begin seeing something incredible over time. Consistency, not explosive growth, not viral profits. Consistency, small gains, controlled losses, slow compounding. And that's the foundation of real profitability. Now here's the important part. Most traders never recognize these signs while they're happening because they're too busy looking for dramatic breakthroughs. But the truth is, the journey from losing trader to profitable trader isn't dramatic. It's behavioral. And if you're noticing your thinking shifting in these ways, there's a good chance you're already on the path. But we're not done yet. Because in the second half of this deep dive, we're going to break down something even more important. The hidden identity shift that separates traders who eventually become profitable from traders who stay stuck in the cycle of learning, losing, and resetting. And trust me, this part changes everything. Because profitability in trading isn't just about strategy. It's about who you become while executing it. Because here's the part that almost nobody talks about. The strategies matter. Risk management matters. Psychology matters. But underneath all of that, there's a deeper layer, identity. And when someone is actually becoming a profitable trader, their identity begins to change in ways that are subtle, uncomfortable, and sometimes even confusing. Because the habits and beliefs that make someone profitable are almost the exact opposite of the instincts that bring people into trading in the first place. Most people enter the market chasing excitement, fast money, big wins, freedom. But profitability is built on something completely different: restraint, repetition, patience, systems. And this creates one of the strangest paradoxes in trading. The closer you get to becoming profitable, the less trading starts to feel like gambling. And the more it starts to feel like operating a machine. Let me show you what that identity shift actually looks like in real behavior. One of the clearest signs that you're becoming a profitable trader is that your relationship with time changes. Early in the journey, traders think in days, or even minutes. You take a trade and immediately start thinking about what it means for your week, your account, your progress. Every outcome feels like a big signal. If you win, you feel like you're improving. If you lose, you feel like you're failing. But this is a psychological trap, because trading results are noisy in the short term. Even a strong strategy can lose money for weeks. Even a weak strategy can win for days. So, judging performance on short time frames creates emotional chaos. This is why beginners constantly swing between confidence and doubt. Now, watch what happens when someone starts evolving into a profitable trader. Their time horizon expands. Instead of thinking about the next trade, they think about the next 50 trades, or the next 100, or the next quarter of the year. This shift sounds small, but it changes everything. Because once your brain accepts that results are measured over large samples, you stop reacting emotionally to short-term fluctuations. Let's break that down with simple math. Imagine a system that wins 55% of the time, and imagine each winning trade makes $1,000. Each losing trade loses $700. Over 10 trades, the results could easily look negative. Variance could produce 4 wins and 6 losses. That means you made $4,000 from winners and lost $4,200 from losers. You actually lost money, but over 100 trades, 55 wins equals $55,000. 45 losses equals $31,500. The system produces $23,500 in profit. Same strategy, same trader, completely different perception depending on time horizon. This is why profitable traders stop obsessing over daily results. They zoom out, and when that perspective locks in, something powerful happens. You stop trying to rush the process. You stop trying to force trades. You stop trying to make today the big day. Because you realize that profitability is built slowly, across hundreds of disciplined decisions. Now, there's another behavioral change that starts appearing when someone is getting close to profitability. They begin trusting their system more than their emotions. And this is where most traders fail, because emotions are loud, immediate, convincing. Your system says, hold the trade, but the market pulls back slightly. Your brain starts whispering, take profit. Don't let this turn into a loss. Close it now. So you exit early. Then the market continues moving exactly as your system predicted. Sound familiar? Every trader experiences this. But when someone begins becoming profitable, they start noticing something important. Their emotions are terrible decision makers. Emotions evolve to handle survival threats, not probability distributions. Your brain is designed to avoid pain and secure quick rewards. That's useful if you're escaping a predator. It's terrible for trading. Because profitable trading requires the exact opposite behavior, accepting small losses, waiting patiently for larger gains, ignoring short-term noise, executing rules even when you feel uncomfortable. So, profitable traders develop something that beginners struggle with: emotional distrust, not emotional suppression. That's different. They don't pretend emotions don't exist. They just stop letting emotions make decisions. Instead, decisions come from the system, the plan, the rules set. And when you reach the point where your plan has more authority than your feelings, you're getting dangerously close to profitability. But there's another shift that almost always appears around this stage, and it's one that surprises people. Your curiosity changes direction. At the beginning of the journey, traders are obsessed with strategies, new indicators, different setups, better entries, tighter stops, more leverage. The entire focus is on finding the perfect strategy, and the industry encourages this. Because strategy content is exciting. But here's the brutal truth. Most traders already have enough strategy knowledge to be profitable. What they lack is execution stability. Let me explain. Imagine 2 traders using the same strategy, same rules, same risk management. Trader A follows the system perfectly for 100 trades. Trader B follows the system for 5 trades, then tweaks something, changes position size, moves stops, closes trades early. Trader A generates statistically meaningful data. Trader B generates chaos, and chaos is impossible to optimize. This is why profitable traders become obsessed with something different. Data, trade logs, performance metrics. Instead of asking, what strategy should I try next? They ask questions like, what happens to my results if I exit partial positions earlier? Which market conditions produce my biggest losses? Does my edge perform better during trending environments or consolidation? These questions are not glamorous, but they are powerful because they turn trading into a feedback loop. Data reveals weaknesses. Weaknesses get corrected. The system improves. This process is slow, but it's extremely effective. And when traders begin focusing on process improvement instead of strategy hunting, that's a massive signal they're leveling up. Now, let's talk about something deeper. One of the quiet signs that you're becoming a profitable trader is that you stop trying to impress people with your trading. This sounds small, but it matters more than most traders realize. In the early stages, trading is emotional theater. You want validation. You want recognition. You want to prove that you're good at this. That's why people post P&L screenshots, talk about huge wins, brag about leverage, because deep down, they want proof that the struggle is paying off. But profitable traders lose interest in this. Not because they're arrogant, because they're focused. Real trading is private, methodical, repetitive. It's not designed to impress anyone. It's designed to produce consistent results. And once someone truly internalizes that, they stop performing for an audience. They start performing for their system. That identity shift is huge, because ego is one of the most destructive forces in trading. Ego leads to overconfidence. Overconfidence leads to oversized positions. Oversized positions lead to catastrophic losses. Removing ego from trading decisions dramatically reduces those risks. Now, here's another sign you're becoming profitable. Your expectations about money become realistic. This is a painful adjustment for many traders, because the internet has completely distorted expectations about trading returns. You see stories about accounts turning $1,000 into $100,000. Massive percentage gains, life-changing trades. But those stories almost never include the full picture. The blown accounts, the risk levels, the survivorship bias. The truth is, professional trading returns are often surprisingly modest. 10% per year, 20% per year, sometimes more, sometimes less, but the key difference is consistency. Let's walk through something interesting. Imagine a trader who compounds an account at 15% per year, not per month, per year, starting with $50,000. After 1 year, the account becomes $57,500. After 5 years, it becomes roughly $100,000. After 10 years, roughly $200,000. That growth might not sound exciting, but it's stable, repeatable, sustainable. And that's the real power of compounding. Profitable traders understand this. They stop chasing unrealistic returns. They focus on preserving capital and generating steady growth. And when expectations align with reality, emotional pressure drops dramatically. Now there's one final shift that reveals someone is truly evolving into a profitable trader. And it's one of the hardest lessons in the entire journey. You accept that the market owes you absolutely nothing. Not effort, not time, not intelligence, nothing. This acceptance is brutal because traders work incredibly hard, studying charts, testing strategies, managing emotions. So it feels like effort should eventually guarantee reward. But the market doesn't work that way. You can execute perfectly and still lose money over short periods. You can make mistakes and still get lucky profits. The market is indifferent, and when traders truly accept this, something powerful happens. They stop trying to control outcomes. They focus entirely on controlling behavior, execution quality, risk discipline, process consistency, because those are the only variables they actually control. And ironically, when you stop trying to force outcomes, your results often improve dramatically, because the behaviors that produce profitability finally stabilize. So when you step back and look at all of these signs together, a clear picture emerges. Becoming a profitable trader isn't about discovering a magical strategy. It's about transforming how you think about risk, probability, discipline, and time. It's about moving from prediction to reaction, from emotion to process, from excitement to consistency. And perhaps most importantly, from ego to execution. That transformation doesn't happen overnight. It happens slowly, trade by trade, decision by decision. And most of the time, the person going through that transformation doesn't even realize it's happening. They just notice that their behavior is becoming calmer, more structured, more disciplined. If that sounds familiar, you might be closer to profitability than you think. But remember this, the goal of trading mastery isn't heroic moments. It's repeatable behavior, the ability to execute the same disciplined process over and over again, regardless of emotion. That's what produces long-term profitability. Not hype, not luck, not prediction, execution. So, if you've noticed any of these signs in your own trading, I'm curious. Which one hit you the hardest? Where in this journey do you feel like you are right now? Drop it in the comments. And if this video helped you see trading from a different angle, make sure you like the video and subscribe. Because this channel is about understanding the real mechanics behind trading performance. No shortcuts, no illusions, just the truth about what it actually takes to survive and thrive in the market. And if you're serious about becoming a profitable trader, keep focusing on the only thing you can truly control, your process. The market will do what it does. Your job is simply to execute, again, and again, and again, until consistency becomes who you are.